for childcare businesses is hot right now, but there are some special considerations you need to make if you want to buy one of these businesses. Hi, my name's Ali Cain and I'm the host of the Buy That Business podcast. Each episode, we talk to expert business brokers about everything you need to know when it comes to buying and selling a business. Today, my guest is Hayden Mollard from Fin Business Sales. Welcome to the podcast, Hayden.
Thanks, Ali. Thanks for having me.
It's a pleasure. So, Hayden, you're a specialist when it comes to buying and selling childcare businesses, but tell us a little bit about your background.
Yeah, well, my background really comes from initially financial services background. So I had sort of numerous roles in Australia with banking and insurance. That led me to go abroad. So I worked in London and then Dubai. In London, I was with an offshore law firm. We were doing sort of corporate structuring and sort of financial planning, if you will, for sort of high net worths and corporates. I then went out to the Middle East where I founded a trust company, part of an international group, but I set up the Dubai office. And we were helping sort of international, some listed companies enter the Dubai and Middle Eastern markets. And then on the flip side of that, sort of helping high net worth and ultra high net worth people structure their wealth, usually outside of the Middle East for succession planning purposes. So that's sort of my sort of initial background. That sort of led me into business broking because I guess in that space where I was, we did quite a lot of analysing P&Ls, looking at strategies for optimising things and then the structuring around that. And typically an exit was, the end point for that, which does correlate quite a lot into business broking, looking at balance sheets of various businesses. So that's me.
Wow, it's quite an unusual background. What brought you back to Australia?
Well, I guess Australia's still the best country in the world, in my opinion. Settling with a family, a lot of people sort of take that rite of passage and go abroad and sort of broaden their skills. But, ultimately Australia is home. So, came back to start a family.
That's absolutely fascinating. I've never really spoken to someone with such an interesting background before. What's the difference between doing business in the Middle East and doing business in Australia?
Well, that's probably going to take a 35-minute podcast in its own right. I mean, it's extremely different. I mean, the Middle East and Dubai, is very much an emerging economy. So, having only sort of developed really since the 70s when oil wealth was found, trying to come to terms with, all the regulation and building those frameworks, does make it very challenging. On the flip side of that, from a base of zero, it helped them. They didn't have to deal with the bureaucracy and years of history. So some of the technology out there is fantastic, but actually putting it into practice can be quite frustrating, with, individuals who haven't, say, had the years of experience that we have been lucky enough to have in the West.
I'm sure we could do a podcast totally on doing business in the Middle East, but let's turn to the topic for the day, which is buying and selling childcare businesses. What are some of the special considerations you need to make when you are buying one of these assets?
Well, I guess when buying any business, you really want to understand the value of the business. Typically, you make money on acquisition, and then whether you improve or maintain the status quo, you really want to understand, what's the value to me? What sort of return on investment do I require? And is this business going to work for me? I think that's pretty standard across all sectors, but when it comes to childcare, there are, different elements and different frameworks that sort of do play a part in the childcare space. So obviously there's educational requirements, there's quality standards, sort of governed by the National Quality Framework. So sort of understanding, how a childcare business is assessed and the value of that, you really want to get your head around before sort of going out and putting offers down.
So what's the market like for childcare businesses at the moment?
It's hot. I think, businesses that weren't very much affected by COVID, are in hot demand at the moment. I think childcare, did have a bit of a, like all businesses had a bit of a stumble at the start of COVID where, people still had to send, but some weren't receiving revenue. But now that things are sort of stabilised, normalised, people are back to work, vacancy rates are down. So, childcare is performing well. And there's a lot of people in the market with interest rates very low that have cash, that want to invest into a business that, is a little bit more certain than, say, a hospitality business, for example.
Yeah, I can imagine it's people are always going to need childcare places, and in fact, it's a growing market, so it's a great little sector to get into.
100%.
So, how do you value one of those businesses?
It's a tricky one. The basic way to we value most businesses is looking at sort of what the profit is, or what the EBIT or EBITDA is, and then applying a multiple to that. Now, your EBITDA is your earnings before interest, tax, depreciation, amortization, and that sort of gives you an understanding as to what the business makes for the owner, and then applying a multiple to that. So in childcare, typically we see multiples between 3 times EBIT or EBITDA, right up to 6 times. And the variance between those really comes down to the individual centre. So, what are the vacancy rates like? Is it meeting or exceeding, or does it need improvement against the sort of national quality standards? What's the competition like in the area? Is a big centre about to get built next door? So there's a lot of factors that come in, and I always sort of encourage people to speak to somebody with a bit of experience, to understand what elements are at play when it comes to valuing the business. Because when you get towards those higher multiples, typically it's somebody who's looking to, say, add value to the business. So if it was, say, operating at, say, a 70% occupancy rate, not meeting the national quality standards, someone could quickly come in there and say, well, hey, there's potentially a 20% upside here if I improve X, Y, and Z. So, the multiple might be higher because there's an upside. On the flip side of that, if a centre is, say, excellent against the national quality standards, it's at a 100% occupancy rate, well, a buyer might say, well, what's my upside here? So the multiple might be lower, but in turn, 100% occupancy is probably giving you a decent profit as well. So it's a really tough one. Some people will say, well, hey, let's get it up to 100%, let's get it fantastic. But, you might not get the best possible outcome on that scenario. Someone might want to buy that centre because they can put their own mark on it and reap that upside for themselves. So, yeah, it's a tricky one, really.
Yeah, that's a great level of detail when you're thinking about valuing a business like a childcare centre. So what are you buying when you buy a childcare centre? Presumably you're not generally buying the property.
It's sort of 50-50. I mean, if it's a leasehold business, that's a business where they, say, don't own the property, they're under a lease. Obviously not buying the property, but quite often they are, freehold and the business included. So obviously that's going to have a very different number when it comes to value. But say if we look at a leasehold, for example, they'll be buying, the existing centre, the fit out, all the equipment, the goodwill that comes along with that, and very importantly, the lease. That does factor a lot into the valuation and into, really that's the business. You want to have a long lease in place. In childcare, we usually say sort of absolute minimum 10 years, but, sometimes up to sort of 30-year leases.
Really?
Yeah, because particularly if you're trying to add value to the centre as well. So, example, you come into a centre, you want to build it up over, say, 3 to 5 years to reap that reward. When you're selling that business at the end, you want to be selling it with, a considerable lease, so the new buyer sees value as well. So, yeah, the lease is very important.
That makes sense. How can vendors prepare their business to get the best price for their asset, especially in this sort of market?
Well, I guess that sort of comes back to that value point, and it is a tricky one because, you could improve your centre dramatically and increase the revenue. That should lead to a better price, but you then might be excluding buyers who are looking for those value type investments. I always say, certainly have it presentable. If you have, websites and all these things, get them to a standard which, would be considered acceptable to the majority of buyers. Like selling any business, you want to appeal to as many potential prospects as possible in order to attract that one which is going to pay the premium price. I'd always suggest as well to consult either your accountant or advisor or a business broker, because you want someone on your side who is giving you sort of honest opinion, feedback as to what offers are good and what's not. At the moment, we're seeing a lot of childcare centres being bought up by national groups. who are coming in and paying what looks like huge numbers, and often they are. But for somebody who's, say, worked in childcare for 10 years and not really had the business experience, may not understand what the childcare business is actually, or the industry is doing at the moment, as to what is a great offer for the business. So getting somebody on board to really advise you through that process, and then come up with a strategy as to what's going to be the best way to take it to the market.
Do you find that, you can buy one of these businesses without any experience, or do most buyers have industry experience when they come to acquire one of these centres?
I mean, probably at the moment, most buyers will have some degree of experience. You don't need experience, although, day one, but during that process of acquiring the business, there's certain educational requirements and standards that you need to meet, to become an approved provider and etc. So there is a framework which works through typically during that buying process if you haven't got experience. But yeah, majority of people will have experience or an interest in early education when they are looking at a childcare business.
What about staff? How do potential buyers take that into consideration? Because I imagine that the staff's really important when you're looking after kids.
Certainly, and also staffing requirements and the staff in the business form part of one of the 7 quality standards that the centres are assessed on. So staff is very much an important part of it. From a customer's point of view as well, in the childcare, they want continuity of staff. They want staff where their children feel comfortable. So that's very important. It's also important to understand the amount of staff that you need, because there's actually requirements around how many staff per child, depending on age groups. So yeah, a little bit more technical than say, okay, I need 3 staff to do X, Y, and Z. There are frameworks which need to be met, but that's sort of what your advisors can help you with as well.
I can imagine. Now, at the start, we talked a little bit about COVID, because the conditions really changed for childcare centres at the start of COVID. How's the market settled now in terms of the rebates that parents get or the childcare centre gets? How does that all work?
Things are pretty standard as far as the rebates are concerned. Looking around the country, different states are always having a different impact as to how many parents are working from home and how many are sending their kids to childcare. In saying that, people are still working and working from home, and we see a lot of them still opting to put their children in childcare, and quite often they've committed to that year. So in some circumstances there's ways of getting out of that, but typically they're committed for that year. And I think that's also what adds to the benefit of the childcare business, is it's recurring locked-in revenue. So yeah, we've seen, the balance sheets that I've been looking at anyway over the last couple of years. Yeah, there's been a little bit of a dip, maybe at the start of COVID, but things have stabilised, pretty quickly coming into 2021. And I think 2022, when borders hopefully reopen and people start getting back into the workforce, I think everyone's pretty much on the same page that things are going to go back to normal in terms of, working environments and wanting the children out of the house.
That's right. And, not just that. I think a lot of people want to go back to the office and that normal way of working as well, which will support, the childcare model into the future, I imagine.
100%. And I think, that's an evolving situation, probably another topic altogether. But I certainly think, the social aspect of re-entering the workforce and, separating, children from working parents, things will stabilise, and I think we see those trends sort of already starting to get back online.
Now, at the start, we talked a little bit about how, national businesses are looking to pick up childcare centres. Do you find that buyers typically want to roll up a number of centres, and what are the economies of scale and synergies that you can get from doing that?
We see a lot of big operators or even individuals having multiple sites. It's a great return on investment if you're operating the site well. So when it comes to economies of scale, well, you've still got decent labour costs at each individual business, but the director or I guess the brain behind the organisation with the strategy and the growth, can oversee several centres. And sort of put in place a framework or their methodology of doing things to sort of build their business and the way they do things. So, Yeah, we're seeing a lot of it. We're seeing a lot of, national groups, listed groups, listed funds like real estate investment trusts that are wrapping childcares up into REITs as a way of sort of, growing recurring revenue for the REIT. But it's busy in the multiple acquisition space at the moment.
Are there typical hurdles that need to be overcome to achieve a sale?
Yeah, like in any business, we've obviously got to go through the due diligence process to ensure that what's on the paper is reality. I mean, the good thing about childcare is it's relatively easy to assess. X number of children, X number of contracts, they're coming in. Here's the rebates, the balance sheets. The profit and loss statements are generally pretty easy to have a look at. The next step then would be, if the person wasn't already approved, going through that approval process. So sometimes there's certain hurdles there with getting educational equivalents, and whether they want to work in the business or outside of the business, that sort of depends on what sort of level of education. But yeah, there are a few little things, but like any business, there are sort of certain steps you need to meet to get to that final point of walking in the door and taking in customers.
So we're almost at the end of our time this morning, but I just want to ask you, what are your final tips for someone thinking about buying a childcare centre to get the transaction across the line?
Final tips. Well, I mean, it's a fantastic business. There's still a lot of upside in the childcare space. So it's a growing industry. There's opportunity to have multiple centres or just an individual centre. So, first things first, it's a great business to be in. As far as tips on sort of getting a deal across the line, well, I guess the first thing is trying to find a suitable centre, which is proving quite tricky at the moment because there's less supply. But I think certainly getting advisors in place early in the piece, speaking to your accountant, speaking to your bank to ensure that you can get finance, chatting to your lawyer, and then, brokers or specialist consultants in the childcare space just to understand the business if you don't already, to see if it's going to work for your circumstances and requirements.
Well, that's very interesting. Thank you so much. I think that buying a childcare centre to me seems like quite amazing, given that you have to look after all those children. But as you say, a really great opportunity. So that's all we have time for today. So thank you so much for joining us, Hayden. If you have any questions or if you'd like to leave a comment about the podcast, please see the contact details at the bottom of this post, and we'll see you next time. Thanks so much.